Welcome to another episode of Bitcoin Magazine Live. I am your host, Q, coming to you from my mother's basement, and I'm joined by my co-host, P. How goes it, P?
P, that is me. It goes fucking amazing. I am distracted by the fact that your mic is the wrong mic. We'll fix it in a second. It's amazing to see you, my guy. You seem tired. Tell us, how was the wonderful land of Oz? And by Oz, of course, I mean Amsterdam. Yeah, there we go.
I am
in tune and on time.
exhausted as hell. Had a 24 hours of travel where I had an overnight layover. That was great, but I'm excited to be back. It was awesome to be in Amsterdam. It was awesome to see everyone that I saw, from the people who watched the show, just all the way to some of the speakers, some of the events we went to. As my voice can probably give away, I spent quite a bit of time at the Amsterdam coffee shops. I became a connoisseur. I got like a punch card at one point, even because I came by so many times in one day that she was like impressed by it. But I told her, I was like, I'll be back tomorrow.
Well, you fucking killed it on the news desk, man. It was, I know how hectic those moments get, like right before everything starts. And I was so impressed with when on the first moment the live stream started, it was like you, Odell, and Joe Hall. And like shit was kind of like, falling down. And you guys were all just like, we are professional newscasters. It came off great. So.
Yeah, that was really fun trying to get Odell's head to not get chopped off by the cardboard cutout behind us. But it is great to be back. Thank you both for holding on the fort, and Andrea and Tina and everyone else for keeping the ship afloat and standing while everyone else was trying to throw yet another Bitcoin conference. It feels shameless and necessary, however, to plug and remind you all that if you missed it, if you had so much FOMO not being there, because let me tell you, it was a Bitcoin conference in Amsterdam, so I'll let your imagination run wild with the debauchery that went on. Bitcoin Miami is going to be at the end of May. I believe it is May 18th. I want to say
18th through the 20th. Yep.
18th through the 20th. You can use promo code BMLive to get 10% off. That 21% Amsterdam code no longer works. If you saw it during the live stream and you snoozed, you lost. But don't miss out on the next conference. It's going to be an absolute banging time. And of course, we should probably let everyone know what we got in store for them today. We will be joined by Charles Edwards, the creator of the hash ribbon signal, for our interview today. And of course, we'll kick things off now with news and notes. I also want to shout out Dylan Leclerc, who is off gallivanting around Italy. So we will not be doing a Bitcoin Magazine Pro, but shout out to the young stud out there. Hope you're enjoying yourself. Let's dive into news and notes though, gentlemen. So the U.S.
Oh, no, wait. Before we do that, I want to talk about our title story, which we kind of talked about on Friday. We did it exhaustively, but there's been a new development. So everybody is freaking the fuck out about this image that's going around Twitter of Kanye supposedly wearing a Satoshi Nakamoto hat, talking angrily into his phone and wearing these insane boots. Two things. One, Kanye West has been talking about Bitcoin since something like 2013. Come at me if I got the year wrong, but for a long fucking time. This is not new. Nothing has changed. Rather, the only thing that's changed is that Kanye West is now getting fucked over by JP Morgan Bank, and that is an interesting development. But we're all looking for hopium. I'm guilty of it myself, but let's be clear about not putting people on pedestals. We have a tendency to do this, especially in bear markets, and let's just be realistic and not get our hearts broken by someone who may do something that is not best for Bitcoin in the near future. What do you guys think?
I mean, I wasn't a part of your guys' conversation. We had our own conversations about this. This just read when it came out like, oh, this is the case study. This is like exactly what Bitcoin is meant to be and offer to someone. So I do appreciate, I think, the hopium that people are trying to inject out there. I think, though, it is important to realize, like, Kanye's been a Bitcoiner for probably longer than most of you, myself included. Like, he's talked about Bitcoin. He knows about Bitcoin. It would be naive to think he doesn't own and hold some Bitcoin. So whether or not he thinks that it's worth all billion plus of his net worth to be held up and stored in Bitcoin remains to be seen. But I think it is important to realize, like, he already is a Bitcoiner. and like creating these like fake hats and stuff to try to create a bullish pump. I think it's just like silly. Don't believe everything you see on the internet. So I think this should be a gentle reminder of that.
You guys are both bears. I'm waiting for the green candle of like, yo, who just bought like 2.1 billion in Bitcoin? And it's like JP Morgan wired to Coinbase, like all like mega bull. He buys a fuck ton more Bitcoin. He's like, I didn't have a bank. I didn't trust these poor folks with my money, so I put it into Bitcoin. I'm my own bank. That's what I'm waiting for. November 30th is the day he's got to leave JP Morgan Chase. So I'll be waiting in this next month for it to happen sometime in that fashion.
Oh, hell yeah. I'm here for it. Let's fucking go.
I mean, look, between now and then, we should also get another reading on the Fed's decision to raise rates. So who knows? Maybe you're right, Chris. Maybe we all just get the biggest rug pull of all, and Kanye secretly tells us he's been DCAing for the last like 5 years. $1,000 an hour.
The point is though, like, who cares, right? Like, Bitcoin is Bitcoin. It exists. Bitcoin is for enemies. You know, we talked on Friday about how, I personally do not agree with Kanye West's sentiments that he's expressed. At the same time, I vehemently support his right to do so. And, we talked a lot about sort of, censorship and the fact that we are using privately owned companies to have all these conversations. And really what we need to be focused on is decentralization. And, so I think it's an important conversation. But I digress. Let's keep going. We got some great stories to talk about today. What's up first, Q?
Yeah, I mean, at some point, you and I are going to hash out your dispute over Kanye because I vehemently disagree with that take.
Oh, shit.
But let's talk the U.S. Treasury. They asked if they should buy more bonds because everyone else is doing it. The U.S. Treasury has asked major banks whether it should buy back some U.S. government bonds in order to move market liquidity, i.e., do they need to lower rates because no one is buying these bonds? And they fear that should no one continue to buy these bonds and the rates continue to shoot up, at a certain point, they're just going to default on all of the interest that's owed on these bonds. And of course, the CDS on a US, any 10-year bond becomes a lot more valuable than the bond itself. So this is going to be really interesting. I mean, we're seeing this decision and this conversation happen all over the world in real time. If you had on your note card things like the UK would flip flop, I think last I had it was 5 times they would flip flop their decision from quantitative easing, tightening, and now back to easing again or tightening. I've lost track at this point. You're seeing France restart the conversations with their own banks. You're seeing the ECB have these conversations. Now you're seeing the US Fed. I think the pivot is now being not openly discussed, but discussed behind closed doors. And these are some breadcrumbs that may or may not insinuate like we are much closer to a Fed pivot than maybe people are expecting. But maybe that is hopium.
Who the fuck knows, man? Not me.
Well, P, what are all these federal banks actually saying, at least, that they're paying attention to?
Honestly, I feel like all this, it's just like so much noise. And I'm so glad that we have people like you who are like deeply focused on it and trying to interpret it. Because for me, I'm just like, TikTok next block. That's my mantra.
I was trying to hand it off to you for the next story.
And our next story, inflation is crushing the world.
Because that's what all the central banks are paying attention to. Or so they say.
Yeah, fair enough. I fucked that one up. Anyway, let's keep going. Yeah, man, average inflation in the world has jumped 10.2%, which is the first time that we've seen double-digit increases since the statistic began being recorded. There's not much more to dive into here. We all know that inflation is increasing massively, rapidly, and we're seeing the public narratives from these centralized entities shift in real time to try to, frame it from like, there's the famous Christine Lagarde, like, you got this transitory hump and then it goes down and everything goes down because the hump is up and then the down is the down. And now we're kind of moving more and more into the dominant narratives being kind of talking about how inflation may be here to stay a little bit longer. And then eventually we'll transition into like, this is where we live now. This is our house now. We live in inflation town. So yeah, it's getting dicey out there. What do you guys think?
Yeah, I agree. It's not a good spot to be in. Their backs are kind of up against the wall. And it's either crash the economy or fight inflation, or let inflation run hot and you destroy the lower middle class both ways. So I don't know.
I just feel like it is important to recognize and note that while the global average may say 10.2%, like things have not jumped up an 10.2%. Like gas is more than doubled from a year ago. Like the cost of beef is up 50, 60%. There are certain things that are being felt much harder than others. And as a result, certain classes of people, as Chris mentioned, are being really dinged by this. And it's really painful to watch and bear witness to. So, this is going to be a really difficult time, I think. And we're just seeing the beginnings of this really play out, unfortunately.
Yeah, that is an important point. When we talk about an average, that's the average. Like there are sectors, as you said, where it's like 50, 60, 70% inflation, and 10.2% as an average is an indication that there's a lot of crazier shit going on.
For sure.
Chris, talk to us about the CFTC.
Yeah, so as Q loves to call him, daddy-loving Gary Gensler, or the SEC chairman, as other people know him, says the CFTC should get more power to oversee stablecoins. So Gary Gensler pointed out the CFTC doesn't have direct authority to write rules for firms that issue stablecoins. So yeah, he's specifically talking about crypto exchanges that offer stablecoins. And yeah, I think the U.S. government or the U.S. regulatory bodies want an end to the stablecoin industry. And it's very, very interesting. They want rules and regulations over top of it. I know there was some interesting conversations this weekend talking about, like, I know Taro is a protocol that Lightning Labs developed trying to get stablecoins on Lightning. We kind of saw recently with Ethereum that now that they updated to new, the merge happened, that they're saying the majority of the validator nodes are in the US, so they have regulatory over top of all of the transactions of ETH globally because they're more centralized in the United States. I think this is definitely a risk that many Bitcoiners are overlooking with Taro, but a lot of people are in the sentiment that if we bring stablecoins or the US dollar onto the Lightning Network, this could be another way that the CFTC or the SEC tries to co-opt the Lightning Network, which I kind of agree with. And we can definitely get into more nuanced conversations in the coming weeks with a couple awesome Bitcoiners about this topic. What are your thoughts, guys?
Okay, I'll go ahead. I mean, look, I think ultimately we've talked about the idea that whatever attack happens to any other broader cryptocurrency, we should assume to some degree that attack or that attempt to have some control or power will be used on Bitcoin. So, regardless of how you feel, there are dangerous precedents being set here. I don't like the idea of inhibiting development for the sake of, well, then we don't want to put a target on our back, because I think that constraint has a far greater cost than I think it does benefit. But that's just my take without really like measuring the technical capabilities of like what could we actually further develop beyond just stable coins on the Lightning Network.
Yeah, that's a good point. That's a really good point. Pete, what are your thoughts here?
I think you guys summed it up, to be honest. I don't have any more to add.
Cool. I'm gonna bring up Binance because they launched a new $500 million lending pool for Bitcoin miners specifically. The soaring energy costs, low Bitcoin price, and high mining difficulty means miners are turning into lenders like Binance to stay afloat, or they're turning to lenders like Binance to stay afloat. I think this is interesting to say the least, because rather than it being a traditional banking entity that's giving you a loan, you're having a company that at least is more familiar with the nuances, the ups and downs, the cycles that are involved in it, in the Bitcoin market in particular. I think it's troublesome that you're seeing companies take on debt right now. I think in our conversation with Fred Thiel, he talked about how not having high levels of debt gave his company the flexibility to handle the downturns in this bear market. And I think, unfortunately, if you're in a position where you're adding more debt at this point, you're paying higher rates. You're not benefiting from the bull run and the upswing right now. You're sort of like betting on the next leg is going to be up, in my opinion. So I feel like it's a little bit of a risky time to be taking on debt. I can understand for certain constraints why you'd need to, but I turn it over to the two of you.
Yeah, I think they're pulling the famous Warren Buffett way or Sam Bankman-Fried way of like you buy at times when people are distressed when they need to sell and you have money to buy their operations or their companies. So yeah, people are looking for deals in this bear market that have the capital to do so.
Yeah, absolutely. I mean, that just makes sense to me. If you have the capital, you can leverage it by lending to people who need it. Increase the size of your position. That's seems exactly like what they are doing.
P, you want to talk to us about SeedSigner?
Yes. All right. So, we talk regularly about interesting developments that are happening in the space from a technical perspective, new projects. One of my favorite hardware signing devices is SeedSigner. If you don't know what it is a device that has a camera involved, uses QR codes, and allows you to sign, Bitcoin transactions without actually storing anything on the device itself. So normally when you have something like a cold card, also a great product, you're storing those private keys on the device. With a SeedSigner, you have a special QR code that you make yourself by hand, and then you scan that QR code that loads your seed phrase into the device, and then you can use that device to sign, transactions. So SeedSigner just released an experimental build of what they're calling SeedSigner OS, which the reason they're doing this is because it is a much smaller binary on the actual device itself, and it allows you to it basically significantly reduces the attack surface, because when you're using the more sort of lines of code you have on any hardware device or any device in general, the more space there is for potential issues, errors, mistakes, and also for people to, hack that device or introduce bugs or things to let them take advantage of, the device itself. So this is a really cool development. Huge props to the SeedSigner team. And if you have not yet experimented with SeedSigner, check it out. It's also really cool because it's one of the lowest cost secure hardware devices. You can build it out of Raspberry Pis, and they're also working on building it on additional hardware. So very cool device. Props to the team. I can't wait, or I hope to continue to see more development on the SeedSigner and in the space in general for low cost hardware devices that will empower people, all over the world and in third world countries to securely store their Bitcoin.
Yeah, definitely. I have nothing else to add there. I think that was a great recap.
P, I just want to maybe tee you up for anyone in our audience who is brand new coming to this show on the heels of Bitcoin Amsterdam. Like, why do we talk? You're going to learn a lot about this. You're going to hear a lot about this if you haven't yet already. But like, what is the importance of companies like SeedSigner and other hardware wallets? Like, why is this brought up so much in Bitcoin?
That is a fantastic question. Thank you for asking it. Bitcoin serves many purposes, but one of the most significant things about Bitcoin is that it allows you to securely take full custody of your own Bitcoin. It allows you to store value that you have earned in a way that is fairly unique, or it is unique in the modern world. You can, most people buy Bitcoin on something like an exchange, although you can also buy Bitcoin from a private individual at a meetup or something like that. But if you buy that Bitcoin on an exchange, that exchange owns that Bitcoin. What you have is you just have an IOU, right? You're trusting that exchange to give you access to those funds when you want them back. And as we've seen from situations like Celsius recently, sometimes exchanges tell you to go fuck yourself and they keep all your Bitcoin. So one of the mantras that we have in the space is not your keys, not your coin. You need to take custody of your own Bitcoin. And the way you do that is by maintaining and holding onto your own private keys. And there's a 12 or 24 word seed phrase that your private keys can be derived from. What your private keys let you do is sign Bitcoin transactions. That is to say, send Bitcoin from addresses that you control to other addresses. And so there are special purpose-built hardware devices, and many of them, that allow you to do this very securely in a very regimented way. And it's a broad topic, but there's a lot of content out there. BTC Sessions has a ton of incredible content. Swan Bitcoin has great content. We have great content. This is a Bitcoin magazine, but taking custody of your own Bitcoin is a very important step in the process.
Yep.
Thank you for that reminder. Chris, talk to us about Nostr.
Yeah, so Nostr is an exciting project that uses end-to-end encryption for communications to your node instead of relying on Tor. So we've seen since May or June of this year, Tor has kind of been getting DDoSed, or at least there's been a lot of usage that sometimes when you're using a Tor browser, when you're trying to use your node privately, it times out because of how long it takes to send or receive information. So people in the Bitcoin community, shout out to Fiat Jeff for his work on it. in order to try and build something that's adjacent to Tor and a way to try and do peer-to-peer communications and communications encryption. So really excited for this project and excited to try and use it for my node because I've had issues with Tor as well. I don't know if there's anything you guys want to add.
No, I mean, I think you nailed it. I'll expound on it regardless, though. I mean, we've got these tools like Twitter, which are extremely centralized. People get canceled off of them all the time. Then you've got tools, systems like Mastodon, which is a federated communication system. It's sort of a clone of Twitter where you have individuals that run their own sort of servers, but you're still beholden to those servers. And if those servers go down and your account is based on that server, then you're still screwed, even though it's more decentralized than something like Twitter, which is fully centralized. And then you have tools like Nostr, which are in development actively and are very promising and are fully decentralized and allow you to, again, in the same way we talk about taking control of your own financial freedom using a tool like Bitcoin, owning your own private keys, Nostr allows you to take control of your own sort of communication freedom, so to speak, and be able to communicate with people independent of any centralized entity, which can be subpoenaed or, kind of whipped into shape by any centralized entity like the federal government. Let's keep going.
Chris, say the thing I typed. That was for you to say.
Sorry, my bad. I missed that. This is definitely something that I believe the Rumble folks and crowd would enjoy and use because you're obviously, you don't need any institution or government to tell you how to use it. So it kind of co-ops them and goes around them. So I think that's a beautiful thing.
Smooth, Q. Very smooth. But you're also not wrong. I think everyone, not only the Rumble crowd, but can benefit from tools like this. This is one in a long line of tools that are, that are being built out. But Nostr is one that's gained a lot of popularity recently, and everybody should check it out.
It's spelled Nostr, no E. But let's talk a little bit about the IMF. So policymakers should re-examine risks posed by exchange-traded funds, ETFs, during periods of stress, the IMF says, even though the vehicles are less concerning than their open-ended mutual fund counterparts. This is where it gets really weird and interesting at the same time. The authors of the IMF's recently published Global Financial Stability Report expressed their deepest concerns about mutual funds with exposure to illiquid bonds, calling on policymakers to ensure that the funds use adequate liquidity management tools. What does that actually mean? That means they are expecting central banks in each of these countries with illiquid bonds, for example, the British gilts, those were called illiquid bonds. And the British government and central bank said, we're going to provide liquidity back to these British bonds, i.e. they restarted quantitative easing. So you now have the IMF calling upon central banks to be prepared and have plans ready to execute in regards to restarting the money printers and going back into quantitative easing. So what was it? Didn't we have the UN or ask for this as well? Now we have the IMF, we have the ECB asking the Fed to essentially be ready to take the same course of actions that other central banks are. Like everyone is signaling and saying like, hey guys, we need to essentially return to quantitative easing. I don't know. Should we create a betting line of when this is going to happen?
You're the betting guy. You tell me. What do you want the line to be?
Do we see quantitative easing from the U.S. central banks before Bitcoin 2023?
Ooh.
I think yes. I think we do.
I'm going to go no. I'm going to go the reverse route.
All right. We need to make a DLC and bet on this on chain.
No. So P's going to eat another shoe. Chris, what are you going to do?
That. I put on a fucking chef's hat. We're done. No more
honestly,
shoes. No more crazy
bets.
bets.
I will do like a $5 bet with P where we do a discrete law contract. If we can make it happen, I'll do that.
Can you explain to our audience?
Did you just say $5 US? What is wrong with you, sir?
Yeah, we're going to do 10,000.
25,643 sats, I think is the correct.
No, you're both wrong. You're both wrong. It's 69,420 sats are on the line.
69,420 sats. Let's go.
Can we
quantitative easing before Bitcoin 2023? If that happens,
by the U.S. Fed, specifically the U.S. Fed.
By the U.S. Fed, if that happens, I win, and Chris owes me 69,420 sats. If it goes the other way and it doesn't happen, then
You owe Chris
I owe Chris. Fuck, I'm already regretting this.
And I want to see another shoe get eaten.
No more shoes. No more shoes.
Wait, really quickly though, can we just explain what a DLC actually is for those who aren't familiar with that?
Yes, great point. A DLC stands for discrete log contract, and it is it's a way to create essentially an on-chain wager, so to speak. This is an oversimplification, but between two parties. DLCs are a sort of primitive that can be used on Bitcoin to create much more nuanced and complicated, financial instruments, options contracts, things like that. But the simplest, you can use them to basically make a bet. And then you have what's called an off-chain oracle. So an oracle is an entity that attests to an outcome one way or the other. So if, in this bet that we're talking about now, I'm betting that, quantitative easing will happen from the US Fed, and then Chris is betting that it's not, we will write a contract that will be written to the Bitcoin blockchain that will rely on a third-party observer who will determine, or a group of third-party observers that will determine or attest to a specific outcome, whether or not it went my way in the bet or Chris's. And the interesting thing about DLCs is that, again, you have the oracle, what's called off-chain, which is to say it is not built, it's not written into the Bitcoin blockchain in a specific transaction. This has a lot of advantages, which I'm not going to go into in too much depth here, but it's a pretty exciting and interesting development that's being built out by tools like SuredBits. And there's a few other products out there that use them. Itchy Sats is another one. And it's, cool technology that's being built out on Bitcoin and has a lot of promise.
David Bailey must be so happy to hear that we're no longer going to put P's stomach to the test on these company bets.
Yeah, I learned my lesson. No more shoe eating.
Let's continue, P. Thank you for that. I will surely be having a lot of DLCs with you this year. Talk to us though a little bit. Was this story we're about to skip?
Yeah.
Oh, okay, cool. Chris,
interesting.
Chris, talk to us about Christine Lagarde.
Yeah, so convicted felon Christine Lagarde is performing the narrative shift beautifully. Lagarde, quote from her, Lagarde saying that either the central bank enters the area of cryptocurrencies or they will lose their central role, and then we will return to the free banking of the 19th century. So one, obviously she was shitting all over cryptocurrencies, specifically Bitcoin and many others as well, saying, if they have an exit hatch, they will go towards it. And we need to make sure all, fire escapes or escape hatches are closed off, one. And then two, saying that returning to free banking like the 19th century is a bad thing, where we've seen more war, we've seen more deaths, we've seen more abuse of power under a central banking cartel since the beginning of the 1900s than any other time in history. So it's pretty funny that she's saying we're going back in time by going to that. I prefer obviously less deaths and less corruption, but that's just me. What are your thoughts, guys?
It's just really interesting to me that the people who've been in control of the money and power for so long continue to be worried about some magic internet money potentially causing them to lose control over the power and the money, almost as if there's a legitimate case as to why, because they have control over the money, they have control over everything else in the goddamn world.
I could not agree more. Yeah. Pete, anything else you want to add?
Nope, you guys nailed it. It's the nail it noise.
I want to ask the two of you, while we still have a little bit of time left. Let's I just want to get your sense of we're seeing these conversations shift all around the world. No, I'm talking to the two of you. Leave us all three on.
All right, I'm going to be pinging our guest to see if I can get him on, but I'm listening /
Okay. Well, essentially my question that I'm trying to be very long-winded about is I'm trying to get a sense of, do we feel like it's concerning or optimistic? And I guess I'm asking the two best people who took the opposite side to the bet you just took, of the fact that you're seeing this narrative from the ECB, the IMF, from the UN, all these different places are calling upon different things like, hey, central banks need to be prepared to continue to inject the market with liquidity, i.e. don't make the people feel bad. Don't make the people feel like we've lost control of the situation. At the same time, you're seeing on the Bitcoin network itself, we continue to expand our hash rate. We continue to see new products develop, new opportunities built, and we continue to see the network itself grow. Price, a whole other conversation. I'm curious if you think these are all pointing in the right direction, or if there's something else that you're paying attention to that you think is going to impact the growth of Bitcoin and the further adoption of Bitcoin.
I can go first. Yeah. I think if you're talking about growth, are you talking specifically price, or can it be like other metrics? Because we're seeing like hash rate.
Well, that's the point. Is like I feel like the price is only really at this point going to grow when the global markets go.
Yeah.
But we see everything else growing despite the price staying still. So, what are the things that are going to help us keep going?
I think I know. They keep saying they want regulatory clarity for institutions, but I definitely think a lot of these institutions are still joining in. We see the likes of BlackRock, and all these other institutions getting in. I kind of agree with Q. You've mentioned this a couple times in the past, even before we went to Bitcoin Amsterdam, that you don't want to see institutions get in because that is a chance that plebs or normal people to not get in, or they're basically, right now is the time to still be front running institutions. Obviously, there's some very niche ones, as in Square and MicroStrategy and a few others that have gotten in. But I think, this is your time to learn Bitcoin, learn self-custody, to run your own node. Things that are growing, obviously, we're seeing the hash rate grow. We're seeing products and services grow. I think, Bitcoin causes things to go, asymptotic. And what I mean by that, we're seeing the price of hardware, get to a point of when we were just talking about earlier, that SeedSigner is one of the cheapest ones on the market. We're also seeing the Jade wallet's $40 as well. We're seeing products get cheaper and cheaper to be made, while at the same time, obviously we think Bitcoin's price is going exponential, and that's the meme: every infinity divided by everything, or everything infinity divided by 21 million. And so I think it's only a matter of time as Bitcoin is the freest market, so it drives prices down because it's deflationary, while also exponentially going up in value because of what it is and how it works. I know that's kind of a long-winded answer, but I hope that helps.
Yeah, I mean, I think that just to repeat, the question was basically what's going to happen that will either drive the adoption of Bitcoin further or potentially work against it. Yeah. We've talked about this a lot, but I think that countries that are outside of the US, many countries are more, they are in a better position. The people of those countries are in a better position to kind of grok Bitcoin very rapidly because they do not operate in a system where their country's currency is the world reserve currency. We have lived in this, magical sheltered garden for so long that it's really hard for US citizens to kind of wrap their heads around the idea of hyperinflation. But other places in the world, they're like, yeah, I get it immediately. Bitcoin, let's fucking go. And so I think that what's going to happen, at least in the United States and in other, quote unquote, first world countries, is that as we start to experience more and more of the effects of the macroeconomic environment, the actions of central banks, people will start to adopt Bitcoin more and more. I don't know that there's going to be some massive tsunami of people oh shit, I got to get into Bitcoin. I think it's just going to grow and grow and grow. But we're already in a world where it is part of the dominant media narrative. People can't help but talk about Bitcoin because it is relevant. I think that's just going to increase more rapidly and more rapidly over time.
Bullish, especially because P made it seem as though once the price pumps, then everyone else will realize they need to get into it. So let it be known, P cares about the price.
Don't we all? You're welcome.
I want to remind everyone before we cut to a commercial break that if you are not yet subscribed to the print magazine, to hop on over to the Bitcoin Magazine store, use promo code BMLive to get 10% off of your annual subscription. The Orange Party edition is at the printers as we speak. Joe Rogers is meticulously checking page after page one at a time. So you'll be sure to receive the highest quality. And I mean, this is thick. This isn't just your casual magazine. And you're not going to want to miss some of the articles that we have coming out, including the Bukele op-ed that you can read online at the Bitcoin Magazine website. Again, the promo code is BMLive. We will be back with Charles Edwards after this commercial break.
You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. Sama.
Thank you for sticking through those commercial breaks, and I'm excited to introduce our guest today is the founder of the Capriol Fund, as well as the creator and inventor of the hash ribbon signal, Charles Edwards. Welcome to the show.
Thanks for having me. Great to be here, guys.
Great to
Charles,
have you.
so we were I wanted to give you the opportunity for our audience who maybe isn't as familiar with you. What other stuff about your background did you want to share?
Yeah, sure. You basically covered it. So I founded Capriol Investments a few years ago. We're a quant fund which deploys our capital across autonomous trading algorithms in crypto with the intent of outperforming Bitcoin long run. So yeah, that's basically my bread and butter, is just trying to identify what drives Bitcoin, what makes it tick, and other assets, of course, and try and find over and undervalue in regions and in price.
Interesting. How has that gone so far in terms of trying to outperform Bitcoin by building trading algorithms in the larger crypto market? It seems like a losing proposition.
Look, it's definitely a challenging environment, and it's a changing game constantly. But yeah, good to date, like over multiple windows. So this month, the last 6 months, and the last 3 years, we've outperformed Bitcoin. So last 6 months, we grew our Bitcoin balance by 50%. Last 3 years, one Bitcoin's turned into more than three. So we've done so with higher risk-adjusted returns in Bitcoin. But yeah, it's not to say that every month or every quarter we outperform. There's definitely volatility in that, but over the long term, yeah, it's doable. If you
so wait, are you saying that you on like a 3-year time scale, you're able to beat Bitcoin's returns, or a 5-year time scale, or is it risk adjusted? You're saying?
Yeah, beat the returns. Yeah,
impressive. It's a rare feat, my friend.
Yeah, it keeps us busy.
I wanted to ask you because you've not necessarily, like, this isn't something that you've just sort of picked up overnight and started doing. You've been doing quant analysis for quite some time. You've been trading and creating these types of algorithms for quite some time. Like, how far back does this go for you?
It started like I've always loved investing, and it started in the stock market, and I was building kind of algorithms to trade that based on kind of value investing principles. Then just kind of fell down the Bitcoin rabbit hole in 2017, and just shifted 100% of my attention to that pretty quickly when I realized that this is going to be this asset class, and Bitcoin is just going to be incredible. So so since then, full time from 2019.
And I wanted to get a sense of just the thing that really caught my attention was the hash ribbon. There was a period this summer where pretty much every single on-chain newsletter was citing the hash ribbon and discussing, we're at that sort of bearish divergence or bullish divergence at this point. I'd like to peel the onion back a little bit. Like, for those people who aren't familiar, like, what is the hash ribbon first off?
Yeah, it's a pretty simple on-chain metric, which created in 2019, and it's trying to find capitulation zones, value zones in Bitcoin. So it's a buy signal only, and it's based on identifying capitulations in Bitcoin miners. So historically, really pre-2021, Bitcoin miners were the dominant institutions, the dominant companies, the dominant entities really in Bitcoin, and they drove a lot of the new supply, of course. And when they are struggling, when their margins get compressed, whether that be from price falling or other aspects, and now of course rising energy costs. But when their margins get compressed, they, some of them, the less efficient miners in particular, because they all have different electrical price and business costs depending on where they're based geographically. The less efficient ones will kind of give up. They may sell their coins, so the Bitcoin, which will add to the sell pressure. They may stop mining altogether. They may sell their hardware, etc. And you kind of then see hash rate kind of collapse from that point, and then it kind of establishes a base where all the inefficient miners have been washed out. And from there, when you see growth in hash rate, and as the same time a growth in price as well, when those two kind of match up, you get a great long-term buy signal. So that metric came out 2019, and it's got a pretty good hit rate. And I think to date, it's still one of the best buy signals. So it fired last, I think it's about 6 or 8 weeks ago, as you said, and it was Bitcoin was at 20.8K. So we're definitely below it, but that's quite normal as well to have a good 15 or 10 to 15% down draw from the signal. So it's not timing perfect bottoms, but it does identify those zones of generally great value. Going forward, what does the metric mean? I think it's still very valuable today and probably for the next at least year or two. But with time, it will probably diminish in signal, simply, at least in the current variation of it, simply because miners as a kind of portion of the entire network, as a portion of asset holders in Bitcoin, are of less significance today than they were 2 and 3 years ago and 4 and 5 years ago. As the supply inflation rate of Bitcoin drops, which is obviously great for investors, but for the miners, it gives them less relative power. And then you also have just the growing adoption and accumulation of Bitcoin today by institutions, so banks, funds, company balance sheets. Everyone, as you know, the last 12 to 18 months that have been getting into the game have developed players that are also very significant and drive price.
So I'm the resident tea leaf expert here, and P is the resident shit on me for reading tea leaves person.
Yeah.
So
Well, call me a skeptic.
just bear with the dynamics of what this conversation may entail. I want to highlight you brought up a very interesting point that while the hash ribbon would have signaled, the crossover on, I think it was August 20th, sometime in late August, but we find ourselves in a lower position. And I feel like there's this mischaracterization of a lot of these, and I'm not trying to be an apologist for different models, but do you feel like trying to accurately estimate price is more foolish than just trying to use it as more of a gauge of time period, or are you genuinely using this as a price barometer?
Yeah, I think gauge is probably a better description. It's not, as I said, it's not timing perfect bottoms. It's just trying to identify when the worst has more or less happened. And it's a good time to kind of generally scale in. That said, it's just one metric. It's not like a silver bullet or a golden bullet.
But also specifically,
yeah,
sorry, I didn't mean to interrupt you, but I wanted to also really specify this point. It's reliant not on the price, correct? It's the hash rate that it's really tracking and following.
That's the main driver. But for the actual signal to fire, it's looking for a price crossover as well. But that happens very regularly. So the main thing which causes the signal is the hash rate.
What assumptions in my head, the way that I sort of understood and depicted this was the largest assumption being made is that there is a significant correlation between hash rate and price. And then we hear that conversation happen a lot. I'm assuming that is one of the larger assumptions that you're using to derive this. Are there any others?
That's the main one. But at the end of the day, it's really about supply and demand and trying to find relationships of supply and demand with the people or the players in the investment game which have significant influence. And historically, that was definitely the miners. Today, they're still relevant, but not as relevant. But you do find there's a lot of correlation with those events across major players. So when we had the miner capitulation, which is 2.5, 3 months based on that metric of hash rate declining, at the exact same time as when you saw all the bankruptcies, the collapses of Celsius, BlockFi, Terra Luna blow up, Three Arrows Capital blowing up. So even though it's just looking really at miners, when miners are struggling, they're very efficient investors. When they're struggling, obviously anyone with risk, excessive risk like those other entities, it tends to kind of all happen at the same time. So it's still a relevant signal, despite the fact that miners are not as influential in the space.
How much have you been paying attention? It feels like Bitcoin miners and mining are in the news ad nauseum at this point in time. Like, how much are you paying attention to that, or do you just sort of let all of those things play out and let the numbers speak for themselves?
Yeah, more the latter, to be honest, at this point. When certain events are happening, or there's major headlines, obviously I'll dive into it and see if there's something interesting there to learn. But the hash rate is just one kind of small piece of the puzzle for us, and it influences our portfolio, but it's relatively small percentage points that it would have effect on. So yeah, we're looking at a broad array of data, on-chain, equity-based data, macro data, sentiment data, and price, of course, in our models. So yeah.
I want to maybe get a sense as well of just, there's a narrative that all the models have been essentially killed on this during this bear market. We've seen everything from stock to flow get destroyed to the like Reddit drawn rainbow chart being laughed at as the last standing model. I'm curious what your thoughts are as you see this narrative build, and how much you give credence to the idea that some models are just so focused on the past that it's hard to make a proper predictive forward-looking algorithm.
Yeah, to be honest, there's a lot of poor models in crypto. So I've been talking about stock to flow since 2019 and 20 publicly about all the issues with it. And that there's been more than a dozen different versions with completely different parameters ranging in price estimates from 2 years ago. This is back in 2020 of like 50K to 300K and everything in between. So it's a classic case of overfitting, of just fitting parameters until you get a curve which looks good. And it obviously took off in public space. Then you often see with on-chain, and it gets a bad rep, that people will get a chart of some metric, and then they'll just see that, okay, in the past, Bitcoin bottomed at these 3 points. I'll draw a line there. Oh, we're going to hit that point now. That's the time to buy. And, it could work sometimes, but most of the time, methods like that will fail because you've only got 3 data points and it's just not statistically significant. So, yeah, you really have to take a bit more of a scientific and rigorous approach to how you model this data. And at the end of the day, it's kind of a confluence of metrics. So no single metric is going to sell is going to complete the picture. So like hash rate, for example, I still think it's great, but it doesn't. I'm not going to bet my life on it. There's a lot of things that fit into the puzzle, and also the fact that the space is just much more competitive now. You just find that you can't, even just looking at half a dozen different metrics, on-chain metrics, it's just not going to be competitive when you're up against funds and institutions which are just crunching data across 30, 50 plus metrics, whatever it may be, millions of data points and all that sort of thing, and running machine learning algorithms over them to identify optimal times to allocate. So it's a much more complicated game. And then on top of that, you obviously have the fact that we have very high correlations with the S&P or just sort of the monetary policy markets at the moment. So there's been a bit of a shift there. So historically, over many 10 years, Bitcoin had basically zero correlation to equities. It kind of fluctuated up and down in waves, and had periods where it's correlated, then negative correlated, and it was kind of a great selling point. But now in the last 18 months, it's been basically flat line, not one, but very high correlations. So that's something to consider as well. It's just it's growing up. Like, it's a bigger asset. It hit $1 trillion. And so it just, you need to consider where it fits in the world, I suppose, and just the players that are in that space.
You look deep in thought.
Oh, I have too many tabs open, man. Um, Charles, I want to maybe get a sense from you. Like, I love that you brought up the correlation. It feels as though like everyone, whether you are a Bitcoiner staring at the price of Bitcoin, whether you are a long time equities trader or bond trader, or quite frankly, anything at this point, it feels like everyone's just beholden on not just central banks around the world, but specifically Jerome Powell and the Federal Reserve here in America to make a decision to pump liquidity into the markets. This obviously isn't really a sustainable model. So I'm curious how you, like, what your thoughts are on just how the future of the market is going to look for the next quarter and into next year.
Yeah, that is the number one driving factor. You've hit the nail on the head there. Monetary policy is driving everything, and obviously that all leads back to Powell. I do think, though, that there's a few elements to it, but there is a point where that relationship starts to break down, and I think we've started to see that the last, call it 3 to 5 weeks, where correlations Bitcoin to risk assets has reduced. Bitcoin hasn't hit new lows yet, but pretty much every other asset class and bonds have. So that's quite interesting. And you get to this point where, it's all one trade, but at some point when the value is so deep, other relationships, which, they start to break down, because once all the sellers are sold, price can't really go much lower. Not saying the global bottom is 100% in. I think the value is definitely skewed upwards, the risk reward, from what I'm seeing in on-chain especially. But it can't like keep going down to the zero of stocks do, if you know what I mean. So that relationship does start to break down. But yeah, it definitely has a big impact. So the Fed and what I'm seeing in that space, I suppose, is, I wrote now in the Caprioli newsletter, which we write each month, that I think that a Fed pivot, and when I say pivot, I mean either a pause in rates or just a complete reversal, will probably happen either this quarter or Q1 next year, for a few reasons. Yeah.
We just made a bet. I'm sorry.
Yeah.
I bet 69,420 sats to Chris, our producer, that they would pivot before Bitcoin 2023.
Yeah. Okay. Yeah, no, that's probably about right then. I would think.
You heard it here first.
If I had to make the bet, I'd probably go with that as well. It depends how you define pivot, but if you mean pause or any kind of change in
that's not what we said, though.
Fuck.
No,
we specifically said provide the market with liquidity. So
okay. It's honestly the way things are going with UK pensions blowing up and every fiat currency collapsing. It's definitely possible. It's interesting though. So like inflation topped a few months back, and the reading last week, which caused a lot of market volatility, was basically a flat line from last month. So I think if they keep going the way they are, inflation top is probably in at least for the next 6-12 months, call it. And all these economic metrics are really lagging. So we saw unemployment still really strong in a half-century lows, so really, really good. And unemployment's half-century lows. But those bottoms often precede recessions. And we have just seen in the last month, came out a few days ago, that initial claims in unemployment has started to rise, and that's kind of hit a level for me, which would flag a much higher increased risk of recession, and also that unemployment in itself will go up. So while rates started rising, end of last year, start of this year, all this has like a 12-18 month lag in actual economic impact. So manufacturing indexes are really going down. Inventories of businesses are going up, so people are buying less, people are producing less demand, and now you're seeing unemployment claims start to rise, still low, but starting to rise. So I do think we're going to see like a big pickup and a lot of volatility and economic damage in the coming 3 to 6 months as a result of this policy. And you just see markets outside the US breaking down. I think Biden said when he was eating an ice cream, I think it was yesterday, that he's not worried about the US economy. It's really strong. He's worried about the other ones. And I think that's because it looks great and rosy today, but if you see the world falling apart around you, that's going to impact the US economy too, because it's less demand and consumption. And I think there's going to be a bit of a shock in that area in the US probably coming. and that will, I just don't see how it's sustainable, the current trajectory of aggressiveness and rate rises, and I think that pivot will come, and yeah, so that's kind of where I see a huge, kind of summing it all up, a lot of value in Bitcoin here, call it here to the next 3 to 6 months, probably mostly this quarter, to be honest, because of that alignment with economic policy, because of 1 and 4 year deep value readings and on chain, because we're at 90% of normal cycle down draws, all those reasons. And I've been saying this for a couple of months, but and in that period, we've just seen Bitcoin basically go sideways for 3 months, from roughly 19K, give or take a few K, just going sideways, building this big base that it normally does, and at the the accumulation zone. So I think there's great value in the market. Yeah, we could get, at the same time, it's compressing volatility. So there will be a breakout one way or the other. It could be to the downside, but it could equally, and I would say potentially higher probability, be to the upside. And even if it is to the downside, if your investment horizon is 1 year plus, you're probably going to get great value, even if it's here or a few K lower. So I don't think call it 12 to 24 months out, I think my base case would be the price would be quite a bit higher than it is today.
I wanted to just get a sense, though, from you, and I'll just ask the most obnoxious question that I've been told to stop asking people, but this is only your first time coming on the show, so I'm allowed to ask it. Can we actually go lower? Like,
oh, God damn it. And if you get this wrong, Charles, we will hold it against you. So yes or no, please answer the question.
Yeah, you'll line me up on Twitter and crush me. Yeah. Of course. Yeah. Look, the short answer, of course we can. There's always new events. There's always volatility. If the stock market crashes down 20, 30%, we're going to follow it. So we can. So it's not about, and that's always the case. It can always go higher, can always go lower. It doesn't matter where you are. So timing bottoms, especially unless you do this full time, if you're not trading it day to day, is almost impossible. So it's about what are the probabilities and where is the risk reward skewed. And yeah, I would say it's, if you've got any long-term horizon, it's to the upside. But, if you're conservative about that, you may want to, scale your capital in over a few months, or maybe you want to wait for the actual pivot to happen. I think once that happens, though, the price will have already been taken off a bit from here. But yeah, the lowest risk time would obviously be when the Fed starts to kind of lower rates, so to speak, or inject any kind of significant liquidity. But yeah, a lot could happen before then, I think, especially if the whole fiat system keeps collapsing the way it is.
How much credence do you give to the dollar milkshake theory?
Yeah, like what part of it do you mean?
Like, we're kind of witnessing in real time other countries' debts and bonds proving to be far more liquid than U.S. bonds. However, they are also proving to be illiquid. Do you think there is a potential for the dollar milkshake theory to sort of come to fruition and see other countries become dollarized? Or do you think other countries, especially countries like within the EU, would rather opt to attempt a new currency over becoming dollarized?
Yeah, good question. I think it's hard to kind of get too specific with this because it's long time frames. But I do think that I wouldn't want to be holding any other fiat currencies. So I obviously have most of my investments in the fund, but then some Bitcoin and then dollars. And it's just because it is the global reserve currency, it has a lot of power and influence, as we see right now. All these fiat currencies are basically intrinsically worthless, I would argue, especially when we're seeing how they're abused in economic downturns and financial troubles and corona and the massive amount of printing we have. So then you if you look at them all, however many there are, dozens and dozens of them, most of them are relatively unimportant compared to the dollar in international trade, barring things like the yuan and other, significant powers. But mostly the dollar is used and valued by many more people. So therefore it should survive the longest, provided that, depending on how the Fed manages that, of course. So yeah, I wouldn't want to be holding pretty much any other fiat currency. Of course, they can do things to relatively improve their situation. If they ramp up rates much more aggressively than the dollar, then that will attract inflows, and it will, help, whether it be the pound or the euro, whatever it may be. It can be, that could be achieved, but that's going to obviously cause major strain and issues in their own country. So, yeah, I do think long term that all these fiats basically go to zero towards the dollar, and then the dollar goes to zero towards Bitcoin. But that's a long time frame.
Okay, Charles, I've got to ask. It sounds like you believe the idea that Bitcoin will eventually be sort of the de facto currency of the future in the internet once the fiat currencies come to collapse and fail. So why do you bother your time with these other shitcoins? Excuse my French.
Yeah. At the moment, I'd say it's Bitcoin. So if I had to take a bet right now and put everything in one asset, it would be Bitcoin. But there's definitely competition to it. Even more so today than I would have said a few years ago. Controversially maybe on this podcast, but like Ethereum, there's lots of pros and cons to both. Ethereum is less decentralized, especially now. You could argue it can be more manipulated because they've done things. They've forked, they've taken things backwards and changed supply and how they do things a few times over the last 5 or so years. But if you put all that aside, all those cons, it does have a lower inflation rate than Bitcoin right now. So that is really quite interesting, and they've maintained that for quite some time, and it's kind of stepped up a notch, obviously, with the merge. And it does have a lot of interesting tech applications, which has seen a lot of adoption for many use cases, which Bitcoin has kind of struggled to get into. So the issue with it is that you don't have the same level of confidence that it's going to maintain the same for the next century, which you do have with Bitcoin, right? It's all hard coded essentially, or programmed what you're going to get in terms of supply and inflation, and that gives a lot of trust for people with long-term investment horizons. And I think that's why we've seen Bitcoin dominate for so long. So that's the case today. But if we go forward 5-10 years, if Ethereum, for example, doesn't change their supply inflation model, if they continue to have lower inflation than Bitcoin for 10 years, and if they continue to grow the same rate they are with tech applications, etc., potentially it could build that confidence up.
I got to jump in here. I respect what you're saying. At the same time, I think it feels like something you have to say, given that your fund kind of invests in these other alternative shitcoins. I think, there's a huge if there. You said if Ethereum continues to do X, if Ethereum continues to do Y. And what we've seen historically is that Ethereum has changed the narrative constantly in order to try to capitalize on whatever the kind of dominant paradigm is. And for me, it's I actually don't necessarily have a problem with that. The thing that's frustrating, as someone who personally focuses just on Bitcoin and feels like Bitcoin is this truly innovative technology, is the kind of what I would define as affinity scamming. I feel like instead of people who focus on Ethereum being oh, you know what, we're just playing it by ear. We're just trying to basically operate in the same way that startups do, which is we just shift and pivot constantly to try to bring in as much VC funding as possible. I feel like if that was the paradigm, it'd be all right, it's a shitcoin. It's operating in the same system that everything else is, but it's not presented that way. It's always kind of it's this new thing, and then the kind of historical pattern gets kind of pushed to the side.
Yeah, I'm honestly not, I would say I'm not biased because of what I do, because we have almost negligible holding of Ethereum, for example. Actually, we have zero holding right now on Ethereum. That will fluctuate, but awesome. It is low percentages, whereas we actively trade at least half our capital on Bitcoin at the moment. So that's not driving my point of view here. I guess I'm just trying to be open-minded because things have happened in the past, but people quickly forget the past. And at the moment, it is harder than Bitcoin in terms of the current inflation today. That's a undisputable fact. You can argue that they're going to change a policy, they're going to change a tech in the future. That's fine. That's the embedded risk, which you have to add to that as an investment. And I'm not disputing that. And as I said, if I had to choose one asset, it would still be Bitcoin today, because I think that confidence is especially important at a governmental level, at a country level, at a company level, in soundness of and hardness of money. But that doesn't mean that things can't change in 5 years. Rewind 5 years, we didn't even have Ethereum, so a lot can happen in that period. And I do think that the tech and the applications, the DeFi, all that kind of stuff that's happening in these other protocols is interesting and definitely valuable. And I do think, put aside the hard money aspect, just look at other financial aspects. I do think there's a lot happening in crypto which is definitely valuable and which will grow probably at a faster rate than Bitcoin, as it has in the last couple of years. It has
I gotta say, I disagree with you, man. I feel like it comes back to the kind of the presenting kind of the potential or the kind of like PR perspective in order to kind of like drive investment. And I think that, for people, it sounds like, you said that you've been able to outcompete Bitcoin's returns. Like, that's amazing and awesome. And I think that's a rare thing indeed. But I feel like they're just two totally different things. I feel like, and there's the constant sort of like intermingling of the ideas of, Bitcoin and, other quote unquote cryptocurrencies. I feel like it's that meme, where it's like that Star Trek meme, where it's like Kirk and like Sulu or whatever. And it's like, are you two friends? And one, and Kirk's like, yes. And Sulu's like, no, or whatever it is. I feel like that's just kind of like what we're talking about here. It's the desire to take investment dollars by claiming that they're similar, but in fact they're very different. But let's go into different.
Yeah, for sure.
Wait, no, I have something. Charles, what are you using to create your inflation rate for Bitcoin?
Just the supply growth rate on an annualized basis. It's about, don't quote me on the numbers, but it's around 2%, maybe slightly lower at the moment.
I have it below 2%.
Halving cycle.
Exactly. And so that's the point I wanted to bring up, is like, I feel like you kind of glossed over and ignored that key component of Bitcoin's inflation rate, which is the fact that with the halving, it will continue to decrease until ultimately no more Bitcoin are issued, versus everything else will never have that. Everything else will continue. Like, the only reason Ethereum's dropped down was because they decided to try to burn off during transactions, and then in turn they shot their gas prices up.
Yeah.
And so I kind of feel like you're cherry picking a little bit there. And I feel like we're not honestly discussing the fact that Bitcoin is the only cryptocurrency that's inflation rate has the potential to eventually reach zero. There's nothing else realistically that could do it.
Yeah, well, look, I am playing the devil's advocate because I'm not disputing what you're saying, and Bitcoin is my favorite. But playing the devil's advocate continued, it is arguably going to become deflationary, Ethereum. So that would make it a negative inflation rate. And, it's an argument how long and how sustainable that is. But if that does happen, as it is looking like it will, then it would be much, much lower than Bitcoin. So... Yeah,
but again, I mean, it changes constantly, right? Like, that's the thing. It's like if I feel like,
I mean, to be really, really honest, the only reason there's a Bitcoin inflation rate is because, like, it's how we've normalized everything that we think inflation needs to actually be implemented. There was a comment that just came up. I don't know who said it. Someone reposted, and I'll put it on the screen. But essentially, it was saying that the real inflation rate of Bitcoin is zero. Like, it's 21 million. It's hard coded, and that's sort of, we all know it. There may not be 21 million in supply right now. We will eventually get there, but the fact that there is that hard limit, with the exception of Litecoin, that you then reintroduce other issues with, like, there are two main components for myself, at least, as to why I think it's Bitcoin and nothing else. And the first is the fact that there is the hard limit, and the second is the fact that you or I, or no one really knows who Satoshi is. Vitalik can get a phone call from any government leader right now, and it becomes a whole other situation. And he may never tell you, I put it to proof of stake because Joe Biden and Nancy Pelosi sat me in a room, waterboarded me, and told me, hey, if you don't do this, if you don't make Ethereum more green friendly, we won't support you, and we're going to chop off your left testicle and never let an Ethereum transaction happen in this country. Like, realistic, I'm not saying that happened. I made that story up. I really hope I at least made that story up. But the point being, like, the fact that the founder is unknown is so much more valuable than people, I think, appreciate. And those two components right there make it Bitcoin or nothing for me.
And that's the most valuable thing about Bitcoin, is that security and certainty in what you have into the future, and that it's actually decentralized, unlike the vast majority of everything else. So I totally agree with that. And especially in this kind of turbulent global times when, there's, a lot of polarization around the world and disagreement with borders and policies and agendas globally, like, there is the biggest risk for Ethereum is that it does become, more or less controlled in what they can and can't do, dictated in what transactions you can approve. Maybe it's, sanctions or whatever, that it gets, told you can't do that. If you're going to have, servers in the US or whatever, you cannot approve these transactions to whoever. And then it just kind of breaks down that monetary value proposition. So yeah, I totally agree.
What, shifting slightly, I'm super curious, what aspects on Bitcoin, like the development that's happening on Bitcoin, are you most interested in or have captivated you recently? I can sort of give some of my own, if that's helpful.
Yeah, you go first.
Okay. I think, for me, like I'm excited by, what's happening with Frost and Music in terms of like threshold signatures and the possibilities there. That's still kind of like, there hasn't been a ton developed there, but also, there's work that's happening with Lightning Labs and Taro, and the idea of, other assets that are transmitted over the Lightning Network. I think that's really exciting. Those are some of the ones that come to mind initially for me.
Yeah. Yeah. The main one that for me is just, is the Lightning Network, I suppose. And that has, still tiny, but it has been growing really convincingly and strongly over the last couple of years, in terms of the capital locked up in there and, addresses using it. So I really hope that continues, because that is, I think, really important, that Bitcoin can scale down that kind of cost basis level, because it's, if Bitcoin is adopted and becomes huge, as we kind of hope and would like to see it become based on its value prop, the reality is that most people wouldn't be able to afford to transact on it unless Lightning takes off. So it's really good to see it seems to be happening. It's still grassroots movements, really. And that, again, the threat, arguable threat there, but and that may change in the future, is that, Ethereum and all these other alts have probably a larger dominance in that low transaction value space. But Bitcoin is growing very strongly in that area. So if that continues, it'd be great for Bitcoin.
Wait, is that true though? That some of these other tokens have are exceeding Bitcoin in terms of low transaction value space?
In terms of like, when I say, I'm referring to basically utilization of crypto for any small value transactions. Call it NFTs, call it DeFi, all that kind of stuff. There's a lot more volume on these altcoins. That's like by a big margin.
Really?
Yeah.
I don't know, but I have to ask, by what metrics or what stats? Because my understanding, and I have not looked at this recently, is that it is significantly more value over Bitcoin, but I could be wrong. And I think a lot of it is at least in the NFT space, is sort of propped up. It's people sort of like not wash trading, but trading between accounts that they control. But
yeah, there's definitely that too.
Is there like a specific
the dollar
metric
values are like multiples higher outside of Bitcoin? Yeah.
Interesting. I mean, I guess are there specific data sources that you're thinking of when you make that claim, or are there? How can we evaluate the validity of that claim specifically?
Yeah, there's just look at the volume. So there's been a lot of charts. They go around Twitter as well. But yeah, we could look at it after this. I don't have one that comes straight to mind, but I've seen a few recently. Yeah.
Got it. I'd be curious. Okay, you look like you were going to say something.
I was, but to be honest, my mind has completely evaded and lost me at the point.
Well, yeah.
Oh,
Sure.
no,
Oh.
I do remember now. Charles, how much are you deriving your comparisons back in US dollar gains versus gains denominated in Bitcoin?
Yeah, so obviously we consider both, but for us as a business, our only objective is to outperform Bitcoin. So that's the main goal. But yeah, like, as it is in the finance industry in general, like all the accounting is done in dollars. It's pretty much standard practice, but we are obviously internally converting everything back to Bitcoin, and that's our objective.
I'd love to get your thoughts on just what a Bitcoin ETF would do if introduced in the US markets.
Yeah, that has been really frustrating, to be honest. There isn't one yet, a spot. I suppose, yeah, it's crazy. It just seems so corrupt, to be honest, that hasn't happened. Especially Grayscale ETF, right? Which is, I should check now recently, but they were threatening to sue the SEC, I think, for not getting approved. I'm not sure what the latest is on that, but yeah, that is just tracking Bitcoin, and then all these other futures-based ETFs have been approved, and the spot one doesn't get approved, which is massive holdings in, and the mark-to-market pricing of that is like 40% below Bitcoin. So all these investors are losing money, but the SEC won't approve a spot ETF conversion. It just blows my mind. And yeah, it brings into mind a whole bunch of possible, theories, which probably most of which are invalid, but it's just very controversial that they would permit futures trading and not the spot trading. And why would they do that? Maybe to hold the price down, maybe to allow for institutional accumulation. I don't know, but it's just very odd. So I think, I hope the spot ETF does get approved soon. It's much better to have actual products trading which are backed by physical Bitcoins as opposed to effectively paper Bitcoins, these futures products. So we have seen massive increase in derivatives-based products of Bitcoin in the last few years, where it's many, many multiples of the spot trading volume. And there is some argument to say that diminishes the potential future return for Bitcoin. In some time horizons, that may be the case. So yeah, I do think it'd be good, primarily, honestly, for a lot of these Grayscale holders to have that converted to a spot ETF. I think it's just a matter of time. At the end of the day, it will happen. The pressure will keep mounting and mounting until they get approved. But at the end of the day, obviously, if you want to get allocation to Bitcoin, the great thing about Bitcoin is anyone can do it and custody it. So yeah.
Do you think it's more concerning that the ETF hasn't been approved, or that there is a legitimate conversation around CBDCs happening in Western democracies?
Interesting one. I'd be speculating and guessing, so I would have no real idea.
Let me rephrase. What's more concerning to you? The lack of a Bitcoin ETFs, or just a Bitcoin ETF, or the fact that both the ECB and the Federal Reserve in the US have essentially discussed openly issuing a CBDC?
Yeah, the CBDCs are, I think, just going to be a disaster. I'm hopeful that they're going to happen in some format somewhere and at some point in time, right? So I'm hopeful that given they're meant to be semi-crypto based, whatever that really ends up meaning, that they will have more on-ramps to other digital assets and Bitcoin, of course, and that could potentially speed up adoption of Bitcoin. In fact, it could be a good marketing campaign for Bitcoin, right? Because it's pretty much the government acknowledging, blockchain, or whatever format they make that be. It may not be a real blockchain, but blockchain is the future. It's here to stay. We're making our money digital and blockchain. And then people kind of like open their eyes and go, oh, okay, so they're kind of they're saying that, Bitcoin, what Bitcoin's based on is valid. It's a real thing. It's probably a good thing. But at the same time, this Bitcoin thing doesn't inflate and doesn't have manipulation. So maybe I might get a bit of that. So I do think that ultimately they're going to be a long-term failure, and that they will probably be good for Bitcoin in terms of that potential on-ramps and potential kind of basically a marketing campaign for Bitcoin. If I'm wrong, it would be quite sad, I think. I think it would be a pretty ugly world if it was run by, centrally controlled digital currencies where everything can be controlled. You go to a shop and your transactions stopped because they don't like the political party you follow or what you said on social media, or who knows, right? So the opposite spectrum of if I'm wrong and CBDCs take off is quite a ugly futuristic world, I think. So, but yeah, I'm confident that good will prevail as it usually does, and it'll end up being good for Bitcoin.
I think. What
What do you guys think?
To be honest, you've said everything that we talk about very openly about CCs,
Okay.
the dangers and risks that it presents. I mean, I saw this in the chat as well, but given how safe and secure all of our government websites are, I really think that the CBDC network would be far weaker as compared to the Bitcoin
Yeah.
network.
Yeah.
But we may not have a choice in that, and that itself is what's more troubling.
Yeah, I think CBDCs are, just awful, and they will be used to massively control people or attempt to. And I think that they're bad news all around. I would like to think that they will legitimize Bitcoin. I certainly have made that argument in the past, but I think ultimately we are we're in a rapidly changing world. It's kind of an asinine statement, but what I mean by that is there are already major entities that are validating Bitcoin in a way that we have never seen before, even in this bear market. We talk about this a lot, but in my view, this bear market is very different from the previous bear market, which is the only one that I have been through. Because in the previous one, major entities were like, Bitcoin is dead, like fuck Bitcoin, you know what I mean? And now, even though we're in the depths of this bear market, the price of Bitcoin has dropped, 65% from all-time highs. There are still major entities, BlackRock, BNY Mellon, like all these major entities that are still committing to Bitcoin as an asset. And then the fact that we have these, these centralized entities talking about CBDCs, pivoting from, Christine Lagarde pivoting from, even what was it, a year ago, saying like, cryptocurrencies are a sales funnel for Satan. And now she's, publicly sort of like, maybe CBDCs are a thing. I think that we're already in a world where Bitcoin is undeniable. And I don't know that CBDCs are necessary to kind of promote that narrative. And I think that they will be very bad and deleterious for people that are forced to adopt them, because they'll get tied into things like social credit systems, and they'll be used to further control people's behavior and try to put a larger yoke around people's neck from a financial perspective.
Yeah, no, I totally agree. I don't think they're necessary either. I just think that they're going to happen because the governments have to do something to try and compete with Bitcoin, right? And keep up with what's new and flashy. So I think it will happen, and obviously it's appealing because it theoretically gives them more and more control. But yeah, I don't think long term it will matter for Bitcoin. I don't think it will. I think short term it might help, but long term I don't think it will matter.
Yeah.
Because they'll never be able to compete on the core value prop of Bitcoin, which is what we've been talking about this whole episode: the supply, the code, the decentralization. So they just it can never compete with it.
Could not agree more.
Nothing ever can. Maybe one day, but I don't think there's anything.
Stay open-minded.
I don't think anything presently has been that is out there has any of the properties, but I digress. Charles, I wanted to thank you for taking the time to join us today. I know that we have we appreciate the time you've given us. I want to give you one last opportunity to say any closing remarks, and we'll cut to a short commercial break after that.
Cool. Thanks, guys. It's been great to be here, and thanks for having me on. The only thing I'd say is just, I guess, for especially people who have less experience in crypto, is stay open-minded of the future of what's happening here, and just to kind of take a long-term mindset, acknowledge that there will be a lot of volatility, but this is probably, if you zoom out and look at a lot of data, a great time to be in this space. And the value prop of Bitcoin is only stronger today, I think, with these global tensions we're seeing. But yeah, that's all from me. So thanks, guys. And if you want to, if you're interested in learning more, you can follow me on Twitter at caprioli.io, and I'll be happy to get in touch.
Thanks so much, man.
Awesome.
Appreciate it.
As a reminder for everyone in our audience as well, tickets for Bitcoin Miami are on sale in case you have the biggest amount of FOMO for not joining us in Amsterdam. Lock in your tickets now before ticket prices go up. Use promo code BMLive. Get 10% off of those tickets, as well as 10% off of anything your heart desires at the Bitcoin Magazine store.
I love it. Yeah, we got our new print mag coming out soon. Get ready. It's going to be amazing. The Orange Party issue. Brace yourselves. That is not the Orange Party issue, but it's close. It says Bitcoin on it. The Orange Party issue will also say Bitcoin on it. And as we talked about, it has a ridiculous ad for Bitcoin Magazine Live with Q&I in it. Oh, the Moon Mag, the Moon issue also. Oh, no.
What about
you
this
don't
one?
even have it. Sierra, you piece of shit. You're just throwing them up there now. Next, I'm going to force you to do like a reading where it'll be like, I once was a boy and Bitcoin
dramatic
was a
reading?
thing.
Okay.
No. Cut his
Clear
mic.
God.
My friends.
On the run.
Producer Chris, 1 bonus point for you.
Didn't you miss
he's
me?
back. No, all right. Let's call it, my friends. Thank you so much for listening. We will see you tomorrow. We have a great show again. And until then, peace.